Hi, I'm here with Tom Jessup from Fidelity Digital Assets. Tom, thanks for joining us today. Do you want to tell us a bit about yourself? And then I know people know Fidelity, but I'm sure they all want to hear about why Fidelity got into the Bitcoin industry and what's important to the firm.
Sure. Well, Michael, thank you so much for having us. It's an incredible event and very happy to share our story and what we're doing in the space. Just quickly, myself, I've been with Fidelity since the start of 2018. Prior to Fidelity, I spent a brief stint at a crypto startup. And then prior to that, 17 years at Goldman Sachs, where I was doing principal investing in fintech. And we were focused on a lot of market infrastructure. We helped stand up exchanges, market data companies like IHS Markit. And we always had this appreciation or understanding for how market infrastructure evolves and reduces friction in markets. And so when I personally learned about this space in 2014, in addition to being really attracted to this concept of with Bitcoin a scarce native digital asset, I was also taken by blockchain technology and the potential implications for finance writ large. And about the time I was getting into this personally, what I later found out when I got to Fidelity is that Abby Johnson, through an organization called the Fidelity Center for Applied Technology, was devoting R&D resources to basic research in the blockchain space. And so just to give you an example, now a big focus of that group is quantum computing and the impact on finance and let's say financial analysis. But in 2014, it was, what is this blockchain thing? What can it do for finance? Is it a new operating system for value? And I think that through certain experiments, for example, we've been mining Bitcoin pretty much continuously since then, running nodes of various networks, continuing to do basic research in the space. We came to the conclusion that this was a transformational technology that would have significant implications for financial services. And I think frequently people have used the analogy of the blockchain or blockchains being the internet of value or money. And I think, it depends how you parse that. I think it's generally true, but I think at this point, we're willing to say that the same way that the internet created businesses we could never conceive of pre-internet, like the ability to buy something on Amazon and have it show up at your door a day later, at the same time, it had impact on media and music. I think with blockchain, what we'll see in hindsight is that there have been these new types of value created and that the technology has transformed value exchange more broadly. And so why is it important to Fidelity? As a company that's entrusted with roughly $10 trillion of client assets, who does business with 1 in 3 U.S. households through our personal investing business or our employee benefits business, who works with tens of thousands of corporations and financial institutions. It's kind of important that we are right ahead of this and get it right. And that is really the genesis of why, back in 2014, we thought it was interesting to research. And then in 2018, when we announced that we were assembling a lot of these capabilities we built and driving them towards a commercial business focused exclusively on institutions.
So, I think you guys are very early to the party, and Fidelity entering the marketplace was actually instrumental in me deciding to invest in Bitcoin. When I first started looking at Bitcoin seriously, seeing Fidelity in the space was like a big green check mark for me, I think. And so you got that going for you.
Yeah.
What kinds of Bitcoin related products and services do you offer to corporations?
Right. So right now we have 2 primary business lines. We have what we call Fidelity Digital Assets, which the best way that your viewers can think about that business is that we are a broker, a prime broker for digital assets. So at the base of that pyramid is our secure custody solution. On top of that, we have what we call our trade execution facility. And why that's important to clients is that it allows us to aggregate liquidity so they can execute at something approximating a best price without having to deal with pre-funding on exchanges and dealing with what can be a fairly complicated settlement system. So we bring liquidity to the client in a form factor that most corporations and institutions are familiar with if they trade FX or equities. We've just launched a collateral agency solution where we can, for lending transactions and OTC derivative transactions, we can be a trusted third party to help manage collateral between a lender and a borrower. So again, something that is fairly well established in traditional finance, but is relatively nascent in digital assets. And we expect to evolve those brokerage capabilities in a number of ways. One is by increasing the types of assets that we service, building vertical capabilities on top of that, giving clients better utility around the assets they hold with us, whether it's the mundane around controls or record keeping to things more advanced around financing. And that is a direction that we are moving in, and a direction that for many types of investors is a suitable solution. We also, back in September, filed for a private fund and are developing an asset management capability because, as you know, and many of your viewers know, for certain types of clients, it's probably easier for them to get access to the asset class through some sort of familiar fund structure than it is to open up a direct custodial account. And so our vision, just given the clients that we serve, is to be able to offer any type of market access vehicle, whether it's direct ownership or some sort of fund product, to really meet their needs and their unique circumstances, given basically who they are and how they operate.
So can you describe your customer base, especially the corporate clients, and who would you say your reference customers?
Yeah, so we don't. Most of our client relationships are not disclosed, but a couple of names that are. So Skybridge, we're a custodian for their Bitcoin fund. We're a custodian for Galaxy. We are a custodian for Kingdom Trust, which offers self-directed IRAs, as well as BlockFi, which is our launch partner for our collateral agency service. I will say that as far as the entirety of our client base, it would be your typical, RAs, family offices, hedge funds. We are seeing increasing amounts of corporate interest. We do have a few corporates on the platform. We actually even have a utility that is interested in using their electricity producing capacity during periods of slack demand to mine Bitcoin. So that, I think, if you asked me a year or two ago, would we see that from an established player in that space, I would have said no, but we're generally seeing a much faster evolution of interest across all client segments, and the diversity of our client base is increasing with a lean towards corporates and other, what I would say, non-traditional early adopter types would be in the digital asset space, which again have historically been family offices and hedge funds.
Okay. What kinds of licensing and regulatory framework does Fidelity Digital Assets operate in, and what jurisdictions?
Yeah, so we are a non-depository trust bank licensed by the New York State Department of Financial Services. It is perhaps the most stringent regulatory regime in the US to do this business. We are also licensed in numerous states as a money transmitter per state regulation. We also have operations based in London, which can serve clients in certain overseas jurisdictions. And obviously, as part of our global remit, we expect to expand our regulatory coverage outside the US fairly aggressively. As a regulated trust bank in the state of New York, we're subject to stringent capital requirements, operational audits on a periodic basis, and other requirements, as well as the things we do separate and apart from that to validate, called the efficacy or security of our systems, which include, for example, things like process audits every 6 months from a Big Four accountancy firm, which are made available to clients, so clients can have visibility and transparency into how we run our business.
So in your opinion, what's the playbook or the process for corporations to go through to purchase Bitcoin as a treasury asset for their business? You have any key considerations?
Yeah, I think so. So the obvious ones are, education, and we've seen a general acceleration of movement through what I would call the 3 phases of digital asset adoption. One is the what is it question. The second is the, okay, what does it mean for me in terms of the context of my specific business? And the third question is, how do I operationalize this? And the good news is we're seeing more clients of every type move through that pipeline in a much faster way. So the obvious question to any corporate would be, what role does this asset have in your treasury management strategy or as a balance sheet investment? And as you've noted and others have, the dominant theme right now is around digital gold, a scarce digital asset, something which is a little bit of a hedge against some of the fiscal and monetary stimulus we've seen in record-setting amounts since the start of the pandemic. So there's obviously that end of it. I think unique to corporations, it's a few things. I mean, something as mundane as thinking about your treasury policy and what permitted investments look like. It's also the case that under GAAP, digital assets, I believe, are viewed as intangible assets and therefore have some specific challenges in terms of impairment testing and how those things can be valued on the balance sheet. But again, one way to get access to these assets and avoiding that problem is potentially through a fund structure of the type that we offer. I would say those are probably the two major ones. And then I think maybe to talk a little bit about the operational side, we obviously have very strong controls around how we manage assets on behalf of our clients. Corporate clients and other institutions also want to have the same set of controls in terms of how they manage access to these assets. So for example, we do not allow any single user at a client to have full control over the transaction process involving digital assets. We have concepts like maker checker. We have highly configurable tools that would allow a corporation to determine who can initiate a transaction and then how many people need to approve the transaction, with all of the appropriate time gates and other things that give clients some assurance that nothing bad will happen on their side in terms of how they manage these digital bearer instruments. And then, behind the scenes, a lot of work we've done around, account structures and other things so that the records of these assets can be quite easily incorporated into reporting and other things on the client side. So those are probably the different things as a corporation coming into the space I would think about: getting smart on what it is and why it's important to your business, having a thesis, understanding some of the practical concerns as a corporate about putting these on the balance sheet, and then finally selecting a service provider that gives you the sort of the controls and the sense of security that you need on your side as you manage your day-to-day interactions with this asset class.
Okay, so once a corporation forms their investment decision, what's the process for them to onboard with Fidelity digital assets? What are the requirements? What are the challenges? And how do you help them overcome those?
Yeah, so I would say is I'm sure there are a number of corporates on the video here that are already Fidelity clients. We probably manage your employee benefits program, or you're invested in one of our money market funds, et cetera. I would say that the process generally looks like the onboarding process that exists in other parts of Fidelity. So there's obviously two-way due diligence. You will diligence us. We will prove our worth to you. We will need to do the same in terms of understanding your corporate structure. Importantly, who the authorized users are on your side, how they work together, KYC, AML. And then we go to something called the Business Acceptance Committee, which is a cross-section of risk, legal, and compliance folks who will vet effectively the corporate application, and then we would approve it and move to onboarding. And our experience is that putting the demand function aside in terms of just how busy we are with the backlog, a lot of the dependencies around timing really sit with the client in terms of having the information at hand and ready. And again, because corporates are used to doing this, our experience is that it actually happens quite quickly. So fairly straightforward. It's just like any other onboarding process with any other part of Fidelity.
Okay. What's your outlook for Bitcoin, and what do you think about the participation of corporations and institutions in the coming 1 to 3 years?
Yeah, it's a great question. So we've been fortunate that we're entering our third year of an annual survey of institutional attitudes towards digital assets. We did the first one in 19. We did the second survey, which was announced in 20. And the headline year on year is that there is increasing interest in digital assets and reduced concerns about digital assets. Let me talk a little bit about what that means. So in terms of increased interest, one question, and we did a cross section of institutional clients. One question we asked was around current allocation and future allocation. And the headline is that in about 5 years, 95% of respondents said they would have some allocation to digital assets, which we think is obviously very positive. Obviously, this educational process and the work that we're doing, you're doing, and others to educate corporate America is taking hold. And we're seeing that in terms of engagement. I think as important, this idea of concerns around the space, whether it's concerns around fraud, around market manipulation, around things that have potentially been associated with the space in the past, concerns about those things have declined year on year. And we're actually in the process of completing our survey for this year, and those results will be made public in a couple of months. So in terms of the empirical data and a big enough sample size, it's definitely up and to the right in terms of interest. And we're seeing this borne out as well in terms of the types of clients we're now speaking to. Having said that, the macro environment has been a real catalyst. I think that we saw a fairly significant uptick in activity shortly after the pandemic and the shutdown in mid-March. and then a successive ramping of interest on the back of things like the Tudor Jones newsletter, news about PayPal. And that has really been the thing that's really forced attention on this space. So our outlook is actually quite positive over the next couple of years. And I think that the more we see the market develop with service providers like Fidelity and some of the other companies that you've had on this at this conference, we will collectively create this sense of safety and soundness and trust that will bring more institutions into the space. I would also add that some of the more implementation related questions that clients had historically, for example, I'm a big fund or I'm a big corporate, like how easy is it for me to get 100 million, 200 million, $300 million of risk on? I think we've seen a tremendous uptick in the amount of liquidity in the market, the sophistication of tools available to clients to trade. And so some of those implementation questions or capacity questions, the market is addressing, not only in terms of the infrastructure, but just the uptick in value or volume. And again, these are the indicia of development or maturity that are important for corporates and others to see before they're going to step in. So we're actually quite positive.
95% in 5 years. Did I hear you right?
Yes. 95% of respondents expect to have an allocation to digital assets in 5 years. And yeah, and the summary survey results are available on our website, and I think have been reported on in the press.
Okay. How is Fidelity Digital Assets different and perhaps a better offering for corporations or financial institutions?
Yeah, what I would say is, rather than go point by point in terms of, things that we think we do better or differently than others, I might approach this from more of a top-down standpoint. We are an institution serving other institutions, right? Fidelity, we manage or administer $10 trillion in assets. We settle millions of trades per day. We move lots of money. We have tens of thousands of institutions as clients. In building this business, we've taken that learning from the early R&D days of this FCAT group within Fidelity and married that with all of the operational capabilities and horsepower reflected in the rest of the Fidelity business. So this is not really our first trip to the rodeo. We view digital assets as being an important service offering for our clients, one that despite having very unique differences from an operational security standpoint, look fairly similar in terms of the means of engagement with the market or with institutions. And so we've taken a page out of decades of experience as Fidelity, and we've brought that in terms of how we think about operational safety and soundness, how we think about architecting our cold storage infrastructure and the security around that. And then I think, we also know what it means to serve a large corporation or institution. We are fairly white glove in terms of our approach to service. Every client has a dedicated relationship manager. We provide research, so we've done a great job educating and helping clients along this path of discovery in terms of moving into the industry. And so we're just taking this, for us, it's like, okay, we already serve these clients. How do we bring this capability to them in a form factor that they understand with the level of service and all of that Fidelity brings in every other aspect of our business?
So what's your product plan for the future? And what's your vision for your firm?
Yeah, so I think, it's kind of interesting. If I were to look way out on the horizon, Michael, what I would say is at some point of maturity of this technology in this space, we won't be thinking about blockchain per se. The same way that if you settle or clear a equities trade, you're not automatically thinking as a consumer, hey, is this going DTCC? So I think ultimately we think these assets go mainstream. We think that all of our clients, whether they're corporate or individual clients, will want a unified experience for these assets. They're going to want to see a holistic portfolio view. They're going to want to be able to risk manage across those assets. They're not going to think so much about the back end and the blockchain. And so I think that's the end state for us. Now, working back to the present, well, it means that we increase the asset coverage we have on platform. We increase the capabilities we have. We increasingly look to integrate the work that we're doing with other parts of Fidelity for client segments that are important to us. We both developed this brokerage capability and this asset management capability in line with client demands. So coming back to what I said at the start of this, we believe this is a new operating system for financial services. It has tremendously positive implications for Fidelity's clients, whether it's access to new asset types or new forms of value, traditional value issued in tokenized format, or even ways to make the existing capital markets infrastructure more efficient in certain asset classes. And we want to be a part of that. And we're starting with the asset that has captured the most attention right now, which is Bitcoin. And we think that if Bitcoin is the rock thrown in the pond, the ripples that it creates will shorten the cycle of interest and adoption of things like central bank digital currencies, tokenized securities, new forms of value that probably couldn't exist pre-blockchain. And our goal is to stay on top of all of those developments for the benefit of our clients.
Okay. So we've got a minute or two left. We've got a bunch of corporations that are on the line right now, and I think they're all interested in Bitcoin. You've been in the industry for a while. You get a lot of experience. Do you have any final words of advice or wisdom for a corporation that's thinking about adopting some kind of Bitcoin strategy?
Look, I think fundamentally what it comes down to is, do your research, do your homework. I mean, it's obviously something that you've done with great success in terms of your exploration of the space. And to the extent we can be helpful, please reach out. We think we understand what your decision process looks like, the sorts of information you need, either in the how do we invest in this or why do we invest in this through to the how do we implement it. And I think, not to say be slow, but be diligent, take your time, really understand the asset class, because I would say it's one that's kind of in its adolescence. We've seen a tremendous amount of growth. We call it an aspirational store of value. It's still very volatile, but it has these incredibly durable long-term properties, which make it, probably the ultimate scarce store of value asset as the market continues to develop and mature. Yeah, lean on folks like Fidelity if we can be helpful in that exploration.
Okay, thanks for being with us today, Tom.
Thank you, Michael.
Your support.
Appreciate the time.
Have a good one.
You too.